Welcome back. Oil is in focus today after OPEC slashed its forecast for global demand once again this year, saying that it may reduce it yet again. Might not be the last time that they're doing this. Now, oil prices have slid more than 55% since the start of the year. Today, it's trading just below $20 a barrel. Now, for more on this, I want to bring in Matt Gallagher, Parsley Energy CEO. And Matt, thanks so much for making the time to join us this afternoon. I mentioned the slide that we've been seeing in the price of crude. It's unprecedented at this point, still below $20 a barrel. Let's start with what is Parsley Energy doing right now to survive the crash that we've been seeing in oil prices recently?
Well, hello, Seana. Thanks so much for having me today. It has been an unprecedented slide. It's a train wreck in full speed. We can forecast and we can see how bad the demand is. It's a 30 million barrel a day shock. So we have been very proactive at Parsley since really rewinding back into January, terming out debt, and then in February, as we got more up to speed on the virus, getting ready to go to work from home status, except for our most critical workers that actually go out to each well head every day. So we have to give them credit. There are our unsung heroes still operating the wells. And then we've cut CapEx dramatically, over 66% on a forward-looking basis. So we're trying to align that supply demand. So we're taking our steps on our side. We've also asked and put a hearing in front of the Railroad Commission, a motion to hear for proration, where the largest producing state in the country could actually prorate and limit that production because we see such a large gap in demand.
Yeah, Matt, I want to ask you about that because it's a little bit controversial, just to the point that so many oil giants out there are pushing back on that. Why do you think this is so important for to do right now? And how do you think it will help the industry here in the short term?
Well, no doubt we're in a global commodity, and a lot of the larger companies have assets across the globe, and they rely on OPEC to make their business decisions for them. We'd like to push that the United States needs to protect its worker here. And if all's fair in love and war, so if it was just the price war and it was just a demand situation, our industry has rolled with those punches over time. But a global pandemic requires a global response. OPEC already took a stab at it, 9.7 million barrels a day. They pressed pause on their price war. We need Texas to take a lead. And we have over 3,000 operators in Texas. We need to communicate to the globe that we are pulling back our volumes. You're starting to see announcements slowly occur. Ours was about 3 weeks ago. There's likely more to come across the board. And there was some from ConocoPhillips and Cimarex today. But if you could get one announcement in unison, that would carry weight on a global basis, and it would provide some certainty and maybe stabilize some of the service sector jobs. There's 360,000 employees in the energy sector just in Texas alone. We're seeing numbers that is off to the tune of 50 to 75,000 employees already just since the beginning of the year across the country. So we're trying to, if we can moderate, not fill up storage all the way to the max, when things stabilize, when we come out of this COVID-19 situation, we'll be able to get back to stabilized activity levels sooner. So it really helps the American worker.
Matt, if this isn't done, if we do see some oil wells closed, do you think some of them are at risk of never opening again?
I do. You've seen that on the low producing and low margin wells in the 80s and 90s and 2014 to 16. Those wells likely will not come back online, probably 10, 15% of them. But volumes associated with those wells are very small. So there are some wells that will never come back online. But in a temporary basis, most of the wells will come back online. In these reservoirs, the shale that we produce, they're pressure driven. They're not water drive driven. So that pressure actually builds up. And we think there's minimal impact to those wells for a sustained shut-in period of 1, 3, or 6 months.
If we don't oh, sorry, go ahead.
We might see single-digit oil price if we just run into full storage tanks. That's what we're trying to avoid as an industry with this proration effort.
Do you think we could see that single-digit price in the very short term if something is not done immediately?
I do. I think we'll see it in the back part of May, no doubt, if we don't see more shut-ins across the country.
Wow. Really putting that in perspective again today. Oil trading up just a little bit, but still holding below $20 a barrel at $19.97. Matt Gallagher, CEO of Parsley Energy, thanks so much for joining us this afternoon.
Thank you very much, Seana.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.